To build anything that truly lasts, it takes time.
Hello and welcome to the big picture right here on ET Now, and in the thick of earnings, analysing another set, we've got Motilal Oswal coming out with their numbers. And for the first quarter, they've seen a revenue uptick of nearly about 18.5%, and the PAT has jumped up nearly about 32%. When you talk about what the external revenue segments have been, the capital markets play a sequential basis has seen an addition and a jump up of nearly about 56%, and that really contributed to their business in the quarter gone by. And the asset management segment as well saw an uptick of about 16%. But who better than Raamdeo Agrawal, chairman and co-founder Motilal Oswal Group, joining in to talk about what he's made of the first quarter numbers and how the future is shaping up. Raamdeo, great to have you in ET Now. Thanks for your time as always. Why don't you only summarize how the quarter gone by has been? Was marred with some challenges, regulatory hurdles, etc. The FI sentiment a little dampened, question mark on tariffs. How did business shape up for you?
Yeah, thanks, Aisha. I think the capital market jashna is still on in the sense that the kind of expansion of the capital market is happening. It's a historical, whatever I have seen in last 40, 50 years. This is unprecedented. And that's what is impacting the performance of Motilal Oswal. We have 24% operating revenue growth and 21% bottom line growth year on year, which is, I think, kind of a record. And the declared profit at 1,430 crores for the quarter is actually very big, but that has to be seen in terms of what happened in Q4 in terms of mark to market. So I think there was a loss in the Q4, and that kind of overstates the profit in this quarter. But nevertheless, I think it's a bumper result by every measure of it. And I think it is led by 2-3 segments doing exceptionally well. One is our AMC. I think they had the highest growth, I think 70-75% growth in AUM and hence profits. Then you have the PWM also grew very strongly. Capital market, where we have become #1 QIP company, and you are seeing every day so many companies are closing their QIPs or IPOs and block deals. And that's where we have raised about 30,000 crores for Indian corporates in this quarter. And that has led to kind of expansion in the revenues. So, and then of course, on top of it, the treasury. Treasury has done exceptionally well in this quarter because the market itself is up about 9-10%. Maybe the entire treasury is up 14-15%. So all in all, I think all cylinders are firing, and that led to over 1,400 crores kind of profit for this quarter, which in our own history, this is by far the biggest.
I want to talk about these segments individually as well, Raamdeo ji. Let's talk about the brokerage income firstly, because you are seeing a little bit of muted performance, but then again, that was the story of Q1. How do you see that panning out in the future quarters?
Yeah, so I think this muted because of this change in the regulatory framework, weekly expiry and all, that got picked out sometime in September last year. So I think another quarter of muted performance from only broking is going to continue because the peak was in September last year. So I would think that July, August, September current quarter would also, it would compare very well with the April, May, June quarter, but year on year comparison, it will look muted, and then I think things will start picking up. And by the time it is fourth quarter, I think it will look like 30-40% growth kind of situation. So that's the one segment which is almost 50% of the entire revenue and profit. That's one segment which is year on year looking a little weaker purely because of regulatory action. But otherwise, other segments of the market, other businesses, they are doing very well.
Are you Is it also coming as a relief that SEBI has now lifted restrictions on Jane Street? Because that was also sort of dampening sentiment.
Yeah, I mean, they were not my clients,
Yeah,
so
true.
we were not that much directly impacted. But yeah, broader market activities that could have got impacted, but now normalcy will be restored once they start trading. And I wouldn't know what exactly was the impact, but yes, if that was a main factor in terms of volumes, counterparty volumes, I think that will help us.
I want to talk about, Raamdeo ji, what the future actually holds for the Motilal Oswal Group. And I think it's for everyone to know that wealth management is that one key segment that you all also are focusing in on. Tell me, what are the IPO plans? Anything that we can see before the close of this fiscal?
No, I don't think we are going to, and any other segment of the company is going to go public. It is going to all remain because they are drawing a lot of strength from each other. So I don't think there is anything on the cards for going, taking one particular segment of the company public. I mean, at some point of time, of course, housing finance will go public, but otherwise, the rest of the capital market will remain under one roof. And as far as the future is concerned, I think the the expansion of capital market, which is started from 2020 on the back of relentless demat, participation by the retail happening in a big way from 20 million, sorry, from 40 million demat accounts, so 200 million demat accounts. And I think we are headed to, I mean, again, double from 200 million to 400 million. Of course, it will take another 5 years. So I see relentless expansion of, of the new clients and existing clients also participating very, very strongly because the returns are very, very attractive compared to the fixed income segment in the market. So I see the only thing is the one caveat is that the corporate performance is not that rosy. I mean, so far we have seen in Q1 there are very few results which are very good. So we have to see how the monetary and fiscal loosening, which has happened in last 6 months, how they play out in the second half of the year when the economy picks up. Except for the corporate earnings kind of a concern or some kind of hesitation at this juncture, I would think that everything is fine. Inflation is under control, interest rates are low, liquidity is ample, banks are asked to lend. So I would think that I mean you got to have a little patience in the market, but longer run we are very well placed to be one of the sectors in the economy which will grow more like 20-25% for next 5 to 7 years.
Oh, yeah, absolutely. And I recall that Diwali show that you and I did when I came to the Motilal Oswal offices. I think it was
Yeah.
2022 when you said capital markets. That's the one
Yes.
theme that's going to go great guns. I recall that very vividly. But tell me, within the capital market theme, Raamdeo ji, and considering, your group is now so diverse and Touchwood so large as well, what segment of your business are you most excited about, say, in the next 1 to 2 years? What do you think is going to power up
Yeah.
maximum?
See, Aisha, what happens is that, like till last year, September, broking was just going full blast. I mean, the volumes were exploding like never before. And then suddenly, thanks to regulatory action, it came to kind of some kind of a halt in terms of expansion. And there was a little bit of contraction also. So, and then the IPO market, QIP market, this entire new issuance market, that is booming big time because now there is a shortage of paper. There is so much of demand for the fresh paper that the IPO market that's booming. So clearly, of all the segments, which one will do very well at given point of time? Right now, I think the biggest action is in the capital market segment where the fresh raising of QIP and IPO that's really booming at this juncture. And second, the AMC. Our AMC is growing at 70-80% per year. So last year at this point of time, we were about 60-70,000 crores AUM, maybe 75,000 crores. Now, as of yesterday, it is 155,000 crores AUM. So this kind of expansion is happening at 60-70% on this scale. I mean, if you grow at 50%, even on 150,000, you are looking at 225,000 crores next year. So I think it's very exciting time. All the AUM-based businesses are growing. All the AMCs are growing. Wealth is growing. As I said, capital market is growing. So only this broking side is somewhat muted at this juncture.
So, like you said, the Jashan, of course, is here to stay. The party will continue for the longer run. But in the near
Yeah.
term, Raamdeo ji, like you very rightly pointed out, I mean, after the bazooka that came by from the RBI, one would have really thought that corporate performance is also going to get a leg up. Demand will come back very swiftly. But like you rightly said, it's not really witnessed in the Q1 earnings so far. Is that a concern for you? Because that's also going to have a bearing on the speed at which the market moves.
Yes, as I said, that's a major concern because markets are very richly valued. So we need to support with the good earnings growth. And wherever earnings growth are there, despite rich valuations, market is giving salami. So now the issue is that, see, we started tightening credit flow in the economy sometime last year after Q1 24-25. And the full impact of that is visible now. I mean, now you are seeing the credit flow to be single digit, your housing loan growth about 2.5%, 3%, your automotive growth is literally flat, or corporate now direct tax collections are also gross collection itself is up only 3-4%. So I think we are seeing multiple high frequency data showing that economy is slowing down, and that all the authorities, regulators, they are aware of it, and that's why we see very determined effort by monetary authorities as well as fiscal guys to loosen the purse. But it takes 2-3 quarters. I mean, I would think that busy season by September, or I mean, I would say October, November, when all the credit flow is in place and lower credit cost is also passed on to the consumers, I think the demand will start picking up, and low oil price, low inflation. I think everything is falling in place, but you have to give 2-3 quarters of time for the party to again start. And nobody knows when the party will start, but I would think that probability is much higher that second half of the year should be picking up in the economy.
Up until then, you think it's going to be a very labor range-bound move only that we'll see, as one is witnessing right now by all indexes pretty much?
Yeah, I mean, what option? I mean, the foreigners, in any case, they have other options to go to America, to go to some other emerging market, go to Europe. Defense spending is happening there. So I think there are a lot of options, and that's why their entry exit is very muted in the sense that more or less they are not committed to India coming. They love Indian story, but since the valuation doesn't justify the current low earnings growth rate, I think the multiples are still fine. If you are able to deliver about 15-17% aggregate corporate earnings growth in second half or something like that.
But so far, Raamdeo ji, what is your analysis? Where do you think the positive surprises, if at all, can actually come in the earnings? Maybe not this quarter, maybe next.
Yeah, I think it will start with the financial sector. It will, is because it's very large, and the banking sector is the biggest. I mean, there are almost like more than a quarter, almost 30% of the corporate profits. The banks are in a very healthy shape. Just that they are growing at 10-12% or 8 to 10%. They are not growing at 15, 20, 25%. So that gap on this large size, like you might have seen the profits of, say, ICICI Bank was very good. HDFC Bank was also, say, reasonably good at. So, but then their numbers are like 16,000 crores, 18,000 crores for the quarter. So these are giants. When the credit growth starts at about 15-17%, each of these banks will do, they will not only have top line growth of a little faster, but also operating leverage will come to play, and their profits growth will also be very good, more like 20%, 22%. And that gives a push to the aggregate earnings. And along with that, even consumer companies, like whether it is a QSR, whether it is a Nestle, whether it is a Lever, I mean, all sorts of consumer companies must get. I mean, how can you have economy growing for sustained for 5, 7, 8 years at about 6.5, 7%, and yet none of the consumer companies doing well broadly, whether durable or non-durable? I think that there is some kind of disconnect. I don't understand why it is happening so, but authorities they must also be thinking about this, how to go about. My sense is higher interest rate, lower petrol diesel prices. I think they need to cut the even petroleum prices. reflecting the 65 to $70 crude oil prices. I think you have to give multiple relief to the consumer so that consumer has little more purchasing power than earlier time.
Yeah, that's the thing, because I remember for almost 3 years we've been talking about when the rural recovery especially is going to come in, and it's really not. I mean, I was just looking at the two-wheeler numbers also. It's just not coming. I mean, what more can even the RBI do? They fired the bazooka from their end, but like you're saying, maybe petrol prices need to come by and that's going to give a fillip, and fingers crossed for the next festive season, maybe something will actually cheer up there. Yeah, absolutely. But other than that, Raamdeo ji, the other concern also is that, valuation comfort is not there in the market right now. It's a very well-discovered market also. Yes, there is a lot of new paper, but largely everything good seems to be baked into the prices. I'm not talking about the IT sector and other. But I just want you to talk a little bit about where is it that you see some valuation headroom or elbow room, if at all, in this market right now?
Yeah, so I think since it is a little fully priced kind of a market, you have to work a little harder to find the values at a industry level and at a company level. So I think wherever you have super growth, that's where I think you are going to see some value. I mean, the pricing gap in the marketplace. So there are very, say, like as I said, I mean, the sectors which are about to turn around. Now, there, I say, like, I think banks have a good chance to turn around going forward I mean, particularly starting from Q3, Q4. That's what I hear from all the bankers. So you have to figure out which bank to get positioned. I mean, if you see, actually, HDFC Bank is up 25%, though it looks like a very sleepy kind of a stock, but it is up 25% on a one-year basis. So you have to be positioned wherever growth is just about starting, because markets are very smart. Once the fact is known, then it is very tough to find value in that. If you preempt a little bit to the growth, I think you have a good chance. Like cement could be. I mean, let's watch the cement stock results, and I think we could be in early stage of revival in cement prices or cement profitability. So I think you will find now there will be churn of the sectors. The sectors which did well till last year, at least in the stock market, probably one or two new sectors will be added this year as the monetary and fiscal momentum changes. Definitely, it will give birth to a new set of industries which will do well in the market.
And that's the other question, Raamdeo ji. I'm sure you and your team also figure out. What is the next ICICI Bank? Because ICICI Bank and HDFC Bank, I don't think there was ever any debate on whether they can deliver or not. But what's going to create that next pool of weightage on the index? I think that's where money is to be made, right?
Yeah, so the worldwide, if you see, Aisha, digital companies are ruling the roost. I mean, if you go to US, it's the top 10 companies, except for Berkshire Hathaway, all 9 are technology companies. So, sorry, all 8 are technology companies, JP Morgan and Berkshire Hathaway. These two are the guys who are stuck there at the top 10. So, so clearly, digital companies are ruling the roost. You must have seen the Zomato result, and today the kind of response market has given to them. So our Nvidia probably is Zomato. So I think this digital companies, they are at a nascent stage. Some of them are listed, some more are going to come. So I would think that many more digital companies will come and they'll expand their businesses very, very rapidly. So I would be overweight on all the digital companies, and it is very tough to put a price. I mean, justify the valuation in the sense that there is so much of momentum. Companies are growing at 70 to 100%. I mean, if it continues for 4-5 years, I mean, it is very tough to put a valuation mark on them. And so one should avoid too much of exuberant valuation also. But I think that is one segment which will throw some companies into top 10, in the sense that right now they might be in top 50, top 100. But you see in next 5-6 years, at least some companies will start getting into top 10 or top 15 of the market caps here.
Interesting. You give us the headline that Zomato is our Nvidia. We'll be sure to send Dipinder Goyal that bite of yours. But great speaking with you, Raamdeo, as always. Thank you for your time today.
Thanks. Thanks, Aisha.
Okay, let's take a very quick break. When we come back, we'll track what's happening with the markets and how the last 1 hour is going to be.